Welcome back, traders, analysts, or just crypto enthusiasts, to another deep dive into the fascinating world of crypto markets. I'm Justin, and today I'm making another video to dig deeper into one of my favorite and probably one of the most insightful and popular on-chain indicator, but it's also often misunderstood. That indicator is the MVRV ratio. And so, what exactly does the MVRV ratio stand for? It stands for market value to realized value. And so it compares the asset's market cap to its realized capitalization. Now, that might still be a bit too much jargon, so I'll simplify it just a little bit further, a little bit deeper. The market cap or the market value is essentially all the units of an asset that can be bought and sold. So, since we're looking at Bitcoin, it's all the Bitcoins that have ever been mined and can be essentially exchanged by participants of the network, right? Times the current market price. So that gives you the market cap of Bitcoin, essentially, right? So you have X amount of Bitcoins in circulation multiplied by, if Bitcoin is today trading at 60K, you multiply it by 60,000. Or if it's trading at 50K, 50,000, right? On the other hand, the realized value is just a little bit more sophisticated. Often it's referred to as the cost basis. And so that looks at the price at which each unit of asset, again in this case Bitcoin, was last moved or was essentially purchased. So you just get a good approximation of at what level was the price of Bitcoin when those Bitcoins were moved and stored into a certain address. And then if you're a data platform, an on-chain data analytics platform, you can very simply look at all the Bitcoins that exist, all the circulating supply, and then at which level they were each bought or transacted at last, and that gives you the cost basis, that gives you the realized value. Now, the MVRV isn't just a number, although of course intellectually it's interesting on its own, but more importantly, it's a window in the psychology of market participants. Think about it. When the MVRV is high, it means that the market value is higher than the realized value. And so what that suggests is most people that have bought Bitcoin are actually in profit and they must be feeling pretty good. If not, if it goes really high, euphoric. But it also means there's probably also selling pressure, right? The risk that now this is as good as it gets and people start to realize gain and start to sell. On the other hand, when it's low, it probably means that, so because the market value is lower than the realized value, the value at which the coins were transacted at, people are in a loss. They're unhappy, they're depressed, they're pessimistic. But it also means that we might be forming a bottom, right? So if you think of it from a market cycle psychology. Now, if you're a trader, like a short-term trader, day trader, momentum trader, you might not really care about that indicator because first it's lagging, so it's not like real time, but also because you probably want to go along with the trend. If, however, you're a long term investor, that's where you like to have a contrarian bias. And what that means is essentially you kind of take the other side of how the market is feeling. If everybody's very depressed and pessimistic and low, you might want to be buying because you think those are attractive, cheaper level. And when things are very euphoric and excited, you might want to take some money off of the table because, well, people are a bit too excited. Maybe it's getting a bit overheated. You can look at it here on the chart that we're looking at. So that orange line is that it's that MVRV Z score. So essentially with standard deviation, it kind of shows you where the more extreme levels are and where the lower levels are. And you can see that it's freakishly accurate. Now, I'll talk about the pitfalls, in a minute. But here you can see it's down in, below in that green area. It's oversold. You can see that the nice people on the website that I'll talk about in a second were nice enough to even mark it on the price line. And they show you, okay, those are good levels to be buying. And indeed, in the grand scheme of things, amazing place to be buying. And then you can see the MVRV score going a bit overheated here. You have two spikes in the red, which are marked here. And indeed, it doesn't look like a big drop, but that's because it's on a logarithmic scale. But if you were trading at that very moment, that drop was absolutely massive. And so you would have been very happy to have sold or taken some money off. Similarly here, which is essentially the top of the ICO boom, so 2017, 2018, great place to be taking some profit off and wait for another bottom, which is here marked by that dip under the green line, the green dotted line. Same here. This was the COVID crash, and then of course the top of 2021, although 2021 was here, but that was kind of where the indicator started to get heated. Now you might have felt sorry, like you missed out because the prices then went down. But again, on the grand scheme of things, if you had taken some money off the table, you might have been buying here, or you might have been waiting a lot longer at the that kind of bottom, right, the 2022 and then even 2023 when we started going back up to present day, which is August 2024 when I'm filming this video. Now, there is pitfalls, right? So you want to be aware of this. First, I mentioned it just a bit earlier. It's a lagging indicator, so it relies on historical data, and you won't see it appear, like you won't see those changes happening on a day-to-day basis. It takes a bit of time for all that data to be to make sense, basically, right? And so sometimes the signal might be a bit too late, but might still be interesting. And then there's, of course, a lot of macroeconomic factors and fundamental factors in the crypto space or black swan event that can drastically change market dynamics, right? So you wouldn't want to over rely on MVRV alone, but interesting indicator to have in your arsenal alongside a lot of other indicators. Now, if I still have your attention, I'll show you another variation of the MVRV ratio, which I really like, and it's interesting. It has a bit of a twist. Basically, it's a bit of a shorter term twist. So it's from the same provider, which I should give a shout out to right now, which is checkonchain.com, and they've got a flurry of indicators. So I definitely encourage you to not rely just on my videos and actually go and check it out yourself. So this is the short term holder MVRV. So it basically takes only the wallets that have been holding Bitcoins in the past 6 months or a year instead of maybe stuff that hasn't moved for 10 years. So it's kind of a bit more relevant, a little bit more dynamic. And then it's added the Bollinger Bands to that, basically to the price, but so applied to the MVRV score. And so what you can see is that sometimes it gets too extreme on the upside or too extreme on the downside. Now, what I've noticed from looking at this chart quite intensely is it's pretty bad at identifying the tops. And I think that's just because the short-term traders might be taking profit at certain levels, or actually, but not enough to push the price down. And so once a trend has started in Bitcoin, like crypto can get extreme for a long time. That trend can go on, and it shows extreme levels higher that aren't really a top, basically. On the other hand, I think it was remarkable or remarkably good at identifying accumulation opportunities. So if, like me, you're a hodler, because for me, I don't even sell or buy, even on those longer term horizon, I just hodl. But I do like to accumulate. I do like to add a ticket here and there, right? And then if you start to look at where it spikes down quite a lot, so between -1 and 2, here you can see the legend here, -1 and -2. You can see here that would have been a great place to buy. 2018, 2019, that place. Again, same thing, COVID crash, 2020. Okay, maybe not the biggest spike, but you can definitely see the price was out of those Bollinger Bands. Here again, April, oops, actually no, terrible place to be buying. Well, I don't know, maybe in the grand scheme of things. Here you look at the price there, great place to buy. So there are times where it doesn't work. This wouldn't have been a great place to be buying, although 30K, like I think it was in the 30, between 35 and 30K, again, in the grand scheme of things, not a bad place to be buying, but definitely not the right signal. Here, good signal. Here, remains to be seen whether it's a good signal or not. I just think that, again, not to be used on its own, but to add as maybe something that's a bit more dynamic alongside other indicators. If you have any questions, feel free to comment down below. It actually helps with the visibility, and so I look at it and I try to answer and interact. And if you've enjoyed the content, of course, please like and subscribe. It really helps a lot. Thank you so much, guys.